Moving on now, the dominance of fossil fuels in the global energy mix is far from subsiding, even as nations are making those efforts to shift to renewables. The Organization of Petroleum Exporting Countries, or OPEC, says global energy demand is expected to increase by more than 20% through to 2045, with oil irreplaceable for the immediate future.
Gas, hydro, nuclear, hydrogen and biomass will expand, but it is clear that oil will remain an integral part of the mix.
OPEC Secretary General Haitham Al-Ghais spoke at the Energy Asia conference held in Malaysia, saying there is unceasing appetite for oil from developing nations. The forecast follows Malaysian Prime Minister Anwar Ibrahim's comments that it is unrealistic to expect developing countries to reach net zero without assistance.
Net zero need not be a zero-sum equation. It should not be one of lowering carbon emissions at the expense of economic growth or vice versa, or, for that matter, the survival of these countries. Asia must take every opportunity to further dialogue and actions around how we can responsibly plan to enable every country its right to development and lower carbon aspirations.
A report by the Energy Institute found that despite a record growth in renewables last year, greenhouse gas emissions have continued to climb. The share of world energy coming from fossil fuels were also largely unchanged at almost 82%. The head of Saudi Aramco, that's the world's biggest energy company, described goals of achieving global energy transition by 2050 as, quote, fanciful. Mr. Amin Nasser cited the equivalent cost of green hydrogen that is stood at $200 to $400 per barrel. That's more than double the current oil price of about $75.